Hello traders, hello everyone, my name is Gregor and welcome to our new update surfing the Elliott waves, where I will look at some of the most important and interesting developments for this week. This video has been brought to you by Orbex. I will look at the 10-year US notes, Aussie, silver, dollar, yen and crude oil. As you know, we had an inflation report in the US on Tuesday. It came out much better than expected. Inflation is coming down. It appears it came out at 7.1% on a yearly basis, and actually what market did, well, US dollar has seen even more weakness, most likely on speculations that FOMC and the Fed members will actually start slowing down the hiking pace. This somehow was also confirmed yesterday on the latest FOMC meeting. So it's not a surprise actually that US yields are coming to the downside for the last few weeks, because as you know, the inflation is coming down as well. So at the same time, looking at the US notes, obviously on the opposite side of yields, we are seeing higher prices here. Notice that market made a very nice reversal higher here. It actually trades slightly above that low back from June. So usually when important low has been firstly broken through and then this same level is not holding as a resistance, well, usually that's a change in trend. So I would not be surprised to see more strength here. However, I am aware of some pullback. So if we see more strength here on the 10-year US notes to the upside, it likely means that obviously that the US dollar will see more weakness while the yields are coming down as well. So speculators appears that they are positioned they position themselves already for this for further Fed actions, which may not be that hawkish, that aggressive anymore in 2023. So however, as I said, there are always pullbacks in any kind of a trend, bull trend, bear trend. So I'm aware of a new pullback here when looking at this price chart. Notice that on the 10-year US notes we can clearly count 5 waves up. We recently spiked to a new high, not really seen an aggressive move to the upside, so maybe there can be some more strength coming into the 5th wave, but keep in mind that that's a 5th wave. So always when you see these 5 waves up here, okay, you should be aware that market will slow down at some point for a 3-wave setback. So that would be the ideal formation, an ABC setback back towards the previous wave or 4th wave supports. Okay, so if that would be the case, if we would see some limited upside here, it means that most likely the US dollar will see some corrective recovery, but only temporary. And I'm looking here at Aussie because it has a very clear structure here. Notice that here we can also count 5 waves up with a recent triangle here in a 4th wave, from where we can see a very nice push higher. So these 5 waves up means that bottom has been formed here. So what we would expect is more gains after this upcoming correction, which is probably already underway because we are trying to break this trend line support. So trend is definitely bullish here for the Aussie, especially when looking for weeks and months ahead. But in the short term, however, I am aware of this ABC setback. Notice that I have here on this 4-hour, even daily trend line, resistance that was broken, but it could react as a very nice support on a next dip. So looking here on the daily chart, that's the trend line I'm talking about. You can see that we have recently had a very nice recovery. We came back to this bullish level here. So it actually suggests that we will most likely continue much higher here on Aussie. Even if you look at the Aussie from this basic technical perspective, notice that we had here a very important big trend line here. We had the 61.8% and also potential right shoulder of a very big head and shoulders bottom formation. So it looks like a very nice candlestick formation as well. That's called actually a morning star formation. So everything suggests that Aussie could do much better than the US dollar, let's say, in months ahead. However, in the short term, I will repeat once again, we could be seeing a corrective setback before bulls are going back in play. Okay, now let's take a look on silver. Silver is showing a very similar price action. Okay, we can count some 5 waves up here from October levels. So again, 5 waves suggest that market would be slowing down, and we recently been updating this one quite closely, and so far we can see a very nice reversal. The price is trying to break this channel support, so when you can count 5 subwaves within a higher degree wave 5 and you see this broken channel, normally it suggests that market is tapping into a new correction. So where the correction could finish? Well, again, at the area of a former wave 4, which is here. Okay, so that whole zone, these levels here, this whole zone will be important to trying to limit the current weakness. Okay, so that would be the ideal zone for a next bounce. So watch out for levels around $21, $22. That would be ideal for a new bounce. Why I think that we could be stepping into this corrective mode is also because of the RSI. You can clearly see that there is a divergence between this wave 3 and wave 5, which typically means that the impulse, even if just short-term high, is in place and that the impulse is finished. Okay, so again, be aware that there can be some pullback before market moves even higher. To give you the higher degree perspective here, I believe that market made a very deep correction here, down from 2021 highs, and with this recent strong bounce, it seems like that this market could be turning into a bullish mode. But again, after a pullback, we could see more upside, not immediately from here. Okay, now let's take a look also on dollar yen. So dollar yen here, also very nice bearish trend here, bearish reversal. Why? Because before that move came to the downside, we were able to count 5 waves up, okay, into this fib resistance. So we were looking for this area around 150 quite closely, and what happened up here? Well, market reversed to the downside with clear 5 waves. Not only with 5 waves, but it also broke this trendline support. So normally this suggests that the top is in place, even if just temporary. So when you spot this kind of a reversal, just keep in mind that even if this move down from 150 will be just temporary current corrective, well, you still need an ABC formation before this current bearish trend is finished. Okay, so what we are seeing now is market trying to stabilize here for a wave A, so watch out for a wave B rise and then even more weakness. So as once again, in the short term, maybe dollar could see some kind of a strength, some kind of a recovery. Looking here, the 4-hour chart, I can see that this upper line of Elliott wave channel, impulsive channel, is trying to act as a support for wave B, so maybe wave C is already in early stages. So ideal resistance, of course, would be around 140.30, which was actually the area of a former wave 4, but we should already pay attention to this level around 140, which is a very important round figure. If we look back at the previous swings when the market was in uptrend, this level comes in also around 140. You can see here. Okay, this was the first intervention, if I'm not wrong. So it could be a very important level up here for sure for a new sell-off, because as I said, we have 5 waves down. So this suggests that market is bearish, but even bearish trend will not just move in one straight line. You will see a pullbacks, and ideally this pullback is now underway for an ABC zigzag. Okay, and now finally let's take a look on crude oil. Well, been tracking crude oil for a while, quite closely in the last few weeks, and since market broke this September level, September lows, we think that actually this drop, a whole structure down from March of this year, is going to be much longer and more complex in time, because we think that market is going to make a higher degree correction here. The important is the shape of this first leg down. Notice that we have a wedge shape, but we can count 5 waves down. Okay, so normally when you see 5 waves, even if this is an overlap between waves 4 and waves 1, this could be a leading diagonal. So leading diagonal occurs at the starting point of a new trend, even if it's just temporary trend. So I believe that's a wave A, still only first leg of a higher degree correction. So I think that more weakness could be seen. But again, this will be a choppy ride ahead, will not be such a clear moves like we have seen here up from 2020 lows, when we clearly had an impulsive personality. So now we are going to step into a very tricky period, into a consolidation. But sometimes even corrections period of consolidations can be simple, like maybe like a zigzag. So we'll see if we get a wave B rally. But what I really like in this latest price action is that market is turning quite aggressively up from that lower trend line support of this wedge. And notice that this current rise came after 5 waves down within wave 5, okay? And you can clearly see that that's a very aggressive intraday bounce here. So in my opinion, that's the first leg of a higher degree free wave recovery, minimum free wave recovery. And when you see 5 waves completed, what would you expect? Well, this broken trend line can then, channel can then make a room for 83.50 for a move back to the former wave 4, which clearly could be the case, especially because that's still only the first leg of a minimum free wave recovery in the short term. So I think that there can be more upside coming here on crude oil in the next week or two, maybe even more, maybe even at the start of January. So I think that at least this $70 per barrel should stay in place after the next pullback, which will either be wave 2 or maybe even only wave B. But in either case, I think that there can be more upside after this retracement here. Traders, thank you very much for your attention. I hope that you enjoyed this video and talk to you soon. Bye.